Emma, I keep seeing IonQ popping up whenever quantum tech comes up. Is there actually something happening here, or is it just more quantum hype?
There's more than hype here, Michael, and the numbers are honestly hard to wrap your head around. We're looking at a company that has transitioned from a laboratory stage venture into a commercially scaling quantum infrastructure provider. If you look at their revenue growth from 2021 to 2025, they grew about 61.9 times.
61 times? That sounds absolutely insane. What are they even doing that's causing that kind of explosion?
They're building infrastructure for the quantum era. IonQ is positioning itself as a full-stack platform spanning quantum computing, networking, sensing, and security. They even have satellite data services. They're essentially trying to cover the ecosystem across space, air, land, and sea.
Okay, so they're everywhere. But how do you actually buy what they're selling? Are they shipping physical computers to people's offices?
Not exactly. A huge part of their engine is something called Quantum Computing as a Service, or QCaaS. They plug their processors into major clouds like Amazon Web Services, Microsoft Azure, and Google Cloud. You don't need to own the machine, you just pay to use the power through the cloud. They also sell hardware, and their pending acquisition of Skywater Technologies would add semiconductor foundry capabilities.
So they're vertically integrating. That sounds expensive. I saw a headline about some wild profit numbers recently. Did they finally turn a corner?
That's where it gets really weird. In fiscal Q1 of 2026, their most recent reported quarter, they reported net income of $805 million.
$805 million? That sounds like a massive win.
On the surface, yes. But you have to look closer because that number was driven by some pretty significant non-operating accounting adjustments. If you look at their actual full year for 2025, they actually reported a net loss of $510.4 million. It's this massive tension between these huge, headline-grabbing numbers and the reality of a company that's still burning through cash to fund its growth.
So it's a total roller coaster. Are they even making money on their actual operations?
Not yet. Their operating margin for 2025 was negative 487.4%. They're spending heavily on research, development, and strategic acquisitions like Oxford Ionics and Capella Space. But here's the tension. The revenue growth is staggering, a compound annual growth rate of 180.5% over 5 years, but their return on invested capital, or ROIC, is negative 13.2%.
That sounds like a huge red flag. If they're destroying value with the capital they deploy, why are people still interested?
Because the sheer scale of their liquidity is massive. They have a liquidity pool of about $3.34 billion. Based on annual burn of roughly $300 million, the report estimates a potential runway of about 11.1 years. That gives them significant time to develop the technology before further financing.
11 years is a long time to be losing money. But what's the catch? What are the core risks?
The bear case is all about that capital intensity and the risk of obsolescence. They're in a race against giants like IBM and Google. If another company breaks through on a different quantum architecture before IonQ can scale its trapped ion system, its current roadmap could become obsolete. Plus, they've seen significant shareholder dilution, with shares increasing over 100% from 2021 through 2025 to help fund this expansion.
So it's basically a massive bet on whether their specific technology wins the race before they need more financing.
Exactly. It's a high-stakes game of execution and scale. We've seen the revenue climb from $2.1 million to $130 million, but the real question is whether they can flip that margin from deeply negative to actually profitable.
I need to know whether this can become a durable business or remains an expensive science experiment. Do we have the full breakdown?
We've dug into the SEC filings and acquisition details to find out. Let's get into the deep dive.
But that's just the surface. The full deep dive on IonQ, the business, the management, the financials, who owns it, the risks, and the valuation framework, is waiting for you on stockanalytics.ai, along with the video library and the option to request your own. That's stockanalytics.ai. And a quick note, this is an AI-generated analysis for educational purposes only, and nothing here is financial advice.